All right, so let's just do a quick introduction in terms of why governments invest. Governments invest in spaces where you would tend to expect the private sector to invest in as to lead into the development of an area. For example, in Barbados in the 1980s, when the Barbados National Bank was formed by the combination of a number of smaller banks in the region, in the area, it was to provide the impetus to create a banking space for Barbadians to use as well. They also invest for developmental purposes, as in the creation of the Barbados Development Bank, or Barbados National Oil Company, or Barbados National Terminals, or the Hilton Hotel. In that case, government had the ability to invest better at the national level than individual investors. They had the money, they had the resources to do that. As the economy grows out, then the decision now becomes, how long should the government stay in a particular investment? Have the investment objectives been met? Have they earned a sufficient return to put the asset into the marketplace for private investors to take over? Or unfortunately, in our case, what we've seen over in the 90s and in this economic downturn, the sale of assets to raise cash for ordinary operations at the Treasury. So when we get past the investment stage, we have the decision to treat the asset as a investment or portfolio type asset, where the government will maintain it and commercialize it and earn a return, because over the years, as they went into the developmental aspect of creating a national asset, they would have incurred assets over the years, incurred deficits, which we would all have complained about. And now we are at a stage where either through by total or partial divestment, two things will happen. The government will earn a return, or getting the return back on the investment that it built up over time, and convert it into more of a portfolio asset if it continues to hold part of the interest in the asset. Alternatively, they can totally divest of it, as they have done with Republic Bank eventually, or the partial divestment that they have done with ICBL, which are two current examples. What a government, in my view, should not do, or should not be doing with portfolio type investments, is disposing of them to meet current operating capital requirements. Operating requirements, not even, rather than switching from one portfolio asset to a new portfolio asset, or generally selling an asset just to create an influx of foreign exchange. And one can say that was what happened when the Barbados government, through its own holdings and through the holdings in national insurance, divested of shares in Barbados Light and Power. Secondly, the other thing I want to make sure you understand, divestment is not necessarily privatization. Okay? A government has the ability of converting a statutory entity, or for example, some of the entities that they've owned have incorporated as private companies, where they're controlled by government, into a private enterprise by transferring it to a commercial owner. That, in my view, is what privatization means. So government steps back all the way from its role through the sale or total divestment of the asset. The people who were in that entity were substantially worked within the public sector, and the operations are then privatized because there's a single owner who operates that asset going forward. In terms of divestment strategy, usually these relate to companies which have been set up as private companies, not statutory corps. So a good example of that would be the hotel project, the Gems Hotel, or the Hilton Hotel. Those are always commercial projects, and those are really portfolio investments of the government. So when they dispose of them partially or fully, then they really is a divestment of a private asset to another private individual, but it is not privatization in the same way that if you converted National Housing Corporation or the QH, which was a statutory board, into, sorry, that's a bad example. If you were to convert National Housing Corporation into a housing company, which has been sold to either publicly to one or more individuals. So I think we have to understand what the changes will be. For me, privatization means...
Isn't that semantics?
No, it is not. It's not really, because when you convert a statutory corporation, you're taking people...
For the benefit of...
Yeah,
can you explain a statutory corporation?
A statutory corporation is a company incorporated by Act of Parliament, which is simply saying the government has incorporated this company and we've vested certain powers in it by way of the statutory organization. So Rural Development Corporation, National Housing Corporation, the Rural Urban Development Corporation, those are statutory corporations. The staff in those organizations are in the establishment of the Barbados government. Okay, they're not. They are employees within the government, and those are the entities typically that we will say are benefiting from transfers from central government on through the budget process. Right.
So if the government owns, so it's statutory, say, part of Parliament. Then what is the other entity that a government will own?
A government can go to corporate affairs and incorporate a company just like we can. And the staff in there are not usually covered by the establishment. The establishment.
But the government still owns it.
The government still owns it.
And then they dispose of it.
That is more of a divestment. That's a commercial venture. In terms, when you convert, to my mind, and I'm giving you my explanation, when you convert a statutory corporation to a standalone corporation as incorporated through the registry, you have literally privatized that entity. While the government may be still 100% shareholder, the transfer of the staff in particular moves them from outside the protection of the general orders into the remnants of being employed and exposed to the vagaries of the Employment Act and the like. Okay.
I would still term it as privatization.
No, it's
I understand, but right. To me, is this semantics? Because
if you take staff who are established within government and you move them outside the general orders provisions, you have effectively privatized.
Well,
right?
We can.
Yeah.
We can go on.
Yeah. Right. So that's it in a nutshell in terms of what my view of divestment is, and the reasons why a government should divest if they've reached the mission in terms of what they wanted to do in standing up an operation like the Hilton. The Hilton will be, to my mind, will be a company which the government can now start divesting itself of that portfolio asset, or GEMS as a portfolio asset. But in terms of converting something like the transport board or whatnot, that's really a privatization type of a transaction.
Okay. In any event, when you pull it down, is you have an asset, whether you call it statutory or otherwise, it's still an asset by government, which whether you call it privatization or divestment, it's still an asset that's being held by government that they dispose of. For one way or another, they're being, when I say dispose
no longer under the control of government.
Yeah, they're all in the control of government.
If you take them out of the realm of, if I use the word our assets as in Barbados shareholders, it is no longer part of our asset profile.
Right, but it's very different. For example, when they dispose of shares of companies like the Light of Power, which have held for a long time, or BET, which they have done. And that is not privatization. That is just divestment of a portfolio asset.
Okay.
All right. Okay. So there is a difference. But again, the thing to emphasize is when should a government dispose of an asset in terms of, and particularly those which are of a commercial nature, I'm talking Hilton, DNOC, BNTCL, and how they should dispose of them.
And who they should dispose of them to.
But how drives who?
Who? Yeah.
Right? When you're sitting in an environment like Barbados where there's been very little growth since 2008, and when you sit in Barbados where there are very little investment opportunities out there, and you're sitting on top of something like $4 billion of cash in the banking system, which is looking for investment, you can do a structured disposal in through the Barbados Stock Exchange, where you can, similar to what was done for ICBL and Republic Bank, general float of the existing shares owned by the government for wide distribution of sale. You can use that approach, which one then gives the ability for people, by ordinary Barbadians, to take control or take a share of that asset themselves directly and build a portfolio of assets, build some wealth as that company's value increases. But when you take it and you put it as a put through sale to a single individual, you're transferring the wealth of the Barbados government, the wealth of the people of Barbados, to a single owner, where the only opportunity you now get to earn from that disposal is only singularly as an employee.
Yeah.
Right? So, and the same goes to the projects the Barbados government is looking at today in terms of Wynnum and other projects that they're trying to get capitalized. Their focus has been on raising debt. They have not come to the market once and said, you know what, we are so convinced that this project is going to be viable and create returns to the Barbados people. Do you want, we will either do a bond issue, or we do an equity issue, or a combination of both, to bring the seed capital to the table, so that international investors will more readily invest in the project.
You won't go into a bit of what would be the difference between the bond and the equity issue? Just for those
just from an equity issue is basically just shares in company. They carry much more risk than a safe bond, which is, or a relatively safe bond that will pay specific interest from a specific time all the way through, and the redemption of that bond is more or less guaranteed. And it is very interesting for people in my age group to see that national development bonds or housing bonds, which were things that you saw in the 70s and the 80s, have not been a feature of raising funds to do projects in Barbados. When the Barbados Development Bank was stood up, one of the ways that the bank was funded was through a series of national development bonds it issues. And those had terms between 5 years and 20 years. And that provided some of the funding to stand the bank up. And, you know, when we look around and see some of the older companies in Barbados, they were able to benefit from lending for the Barbados Development Bank. When the National Housing Corporation was first stood up, they issued national housing bonds to fund developments like West Terrace. It's probably one of the biggest developments in Barbados ever done. Was that West Terrace development by the National Housing Corporation. All right. So these are the type of things that governments can use, and like funding the private sector, specifically, especially when there is very little investable vehicles available for individuals.
So you would agree that there should be some sort of template or blueprint for divestment and a part form of a long-term strategy?
It has to be a long-term strategy. It has to be formatted. When we stand a corporation up, these are the benchmarks that we need to hit on. That will trigger a discussion on divestment, and these are the objectives of divestment. This is how we will do it, and why we will do it. But I want to emphasize, we cannot divest of public assets, or we should not divest of public assets to meet current expenditure requirements or to plug holes in foreign exchange reserves.
I will use my analogy. I like to use the one. If you sell the cow today, you ought to buy the milk tomorrow.
government should not, for me, as it continue to hold the sole owner of assets that if it takes on the people who are able to create an industry, to create a new vehicle, to help development, so be it. But if once it becomes profitable, it's earning a return, the correct strategy for a divestment is a public sale and to utilize the vehicle we put in place back in the 1990s of the Barbados Stock Exchange.
But so you would say that some sort of right of first refusal should come
from the public.
From the public in the first instance.
The same way,
assuming,
yeah.
Obviously, there's going to be technical capabilities, like because we can't run a lighting power per se.
But there's a difference between owning it
and operating
it.
Yeah.
If there's professional staff and they're operating today, they're not affected by the divestment. If they're making, why would I get rid of those staff if they're making money, right? The challenge comes when a large player comes in and says, well, I own 60%. I've taken 60% of the shares in the market. I have the ability to direct the company. And then, as we saw in Republic Bank, say, well, we're coming in with an offer. If you hit the 90% threshold, you must sell, right? That's the deal. But when you get to a diversity of ownership, the major owner might have no more than 40%. It becomes a different discussion for the shareholders. The returns coming back to the shareholders as a group, as a pool, becomes a very different perspective.
Okay. Let me switch gears a little bit here now, because a lot of times we see other methodologies used in terms to try to attract investment. And one of the things that we see is Crystal will have picked up on some of these through the Audit General report where certain lands are leased at preferential rates. Yeah. Isn't that a form of divestment in a form? And that's preferential to one party and other parties?
It is first of all, it's preferential to one party. That's clear. When we look through, we have to look through what the strategy is in terms of, is it something that would only have been attractive if it was done this way? Is it done in terms of national goodwill? Is it how many people got to the table in terms of being able to bid for it? And I think the most critical one of it, was there a need in the social continuum in Barbados to do a project on that basis to fill in a social need? If that was the case, certainly. If this is just to facilitate or provide an opportunity for someone in the private sector to leverage off of the ownership of the government, of the land by the government, then it was not on a policy basis. It was not done to fulfill a particular policy objective.
See, one of the things that I would go back to is there was a plot of land out by the back of CBC between the Water Authority.
Right.
And that was allocated so-called for manufacturing. I know because when I did manufacturing, that was one of the facilities that we were looking at. And in quick time, they were all snapped up. When we called, we were going through the process of finalizing our last one, and then got this call that said, sorry, that one is gone. So after going through the process of trying to get things in place for like a month, we got this call saying it was gone. Now here's the thing, this was allocated for manufacturing. Manufacturers that had some issues getting it. That was in, I think, 2006 or 2007. I go through there on a regular basis, and in all those plot of lands,
it's residential.
No, it's overgrown. There's been no manufacturing done. And I see the land is being cleared, and what reminded me is I saw an ad today for a plot of land that was cleared in there. I have 1, 2, 3 businesses up in there, 4 businesses up in there, all the lots. Whereas you could have had manufacturers getting land at preferential rates to be able to turn it into hard currency. It was set up in that in mind. And in my mind, if you're going to do that, you have to put clauses in there that if you do not develop to what the covenant says, then it reverts back to Crown and it goes back to somebody who
it goes back.
So so now the preference there was for manufacturers to be able to set up, to build and grow their business, and we were doing it from a perspective of looking to an export market, to have our own preferential facility. But we've had people sitting on those pieces of land for 10 years,
right. So
instead of turning them into productive land.
Who purchased or who leased?
Who purchased the lands?
Yeah.
I don't know the names of the people.
So I've got to push back a little bit at you, Dwayne, because if that was 2006, 2007, the economic environment changed.
Substantially changed.
So financing dried up and the risk profile changed, right? So I don't know offhand, but we don't know who the other owners are, and I would be interested to understand who they are. But I agree with you.
I got $40 in my pocket, and I will bet you, I will make a bet that of all those lands in there, I will make a bet not half of them was manufacturers.
All residential?
It's not residential. It's land that was
commercial.
It's commercial land.
It's commercial
but
land.
Nothing was developed. I don't care what you tell me about with the economic times. There's nowhere that you could tell me that that was not bought with the intent to develop. And if you can develop it within 2 years, give it to somebody who can, because the intent of buying it at a preferential rate was not to turn it into a speculative. And then if you, in my opinion, if you take Crown lands at a preferential rate, you don't use it for the
intended purpose.
Intended purpose, then and you sell it at a higher rate, that entire amount should go back
to the Crown.
Yeah. I agree with you on that.
Shouldn't be profiting off
Because it would take out all the speculative issue on it,
right.
And bearing in mind where it was located in a prime area.
Correct.
It was because at the time I can't remember what the rates were, but the rates were I think speaking on the term, I think about half the market at that time, and the whole intent was good because it was helping someone who was genuine like me who wanted to be a manufacturing, and it was done. We didn't really feel the impact of the crisis till 2009. Mm-hmm. We went through 2008, and I can tell you for a fact because I know what I said in March 2008, and I remember in 2008. Yeah. So we didn't really feel the effects, and this happened in 2007.
Yeah. Well, so going back to our discussion on government investment, that's an instance of a government making an investment in manufacturing through a mechanism like that, notwithstanding that the people who took up the offer did not follow through. A government has the ability to use mechanisms like below market sale of land or below market sale lease of land or property to provide an investment environment for individuals to create wealth for themselves. Okay, so I understand what you're saying, and I remind the audience that back in the late 70s or early 80s,
reminding those that were around
those were around, and educating those who were not. Under the Tom Adams administration, he introduced a idle agriculture land tax to actually move the people in that industry forward in terms of if you have idle land and it's not productive, then you will suffer a higher tax rate. Those are the type of policy instruments that are available to a government to use to stimulate investment, either punitive on one side or concessionary on another. Again, on divestment must not be used to fund
for
short-term operational funding or for short-term plug-in gaps in foreign exchange reserves. It can be used to divest the government of an asset which is now built up to have a significant worth over the amount they invested in. It can be used to divest of one asset and take the capital gain or capital appreciation and use those funds to stand up another project which is from a policy perspective is required in Barbados, and the government needs to drive it to the private sector is ready or able to put the additional funds in. So I'll give you an example. Last example, I think time is running. Needham's Point development, the redevelopment of the Hilton Hotel.
Mm-hmm.
I think the bond for that came to about 5 years ago because it was back in Barbados, something $80 million, either 80 million US or 80 million Barbados dollars. That bond went out as a private placement. It was not placed in the public market in Barbados where Barbadians could have taken advantage of that. So what that does, and Needham's Point Development is a private corporation owned by the Barbados government, it put the burden right back fully on the state, right? It put the burden right back on the state in terms of the guarantees. A market issue without a guarantee or a divestment of part or all of the shares of Needham's Point Development would have changed our debt profile in total in Barbados. Because as you know, even if the government has not borrowed the money directly, once the Barbados government has given a guarantee, it counts as part of the national debt, right?
One of the questions which some persons may have, if you don't invest and get involved with the divestment, because you said you shouldn't do that to foot your operational bills, then what does government do? Because they have to do something. And the options seem to be running very low as to what exactly they should do to help stay afloat. Because borrowing has its own risks.
Borrowing has its own risks.
And especially now that we are junk bond status, our borrowing options are very slim.
Yeah, the problem is that you hit the line, you go, you hit the short term, you find the short term gap. What happens 2 months from now?
I agree.
Right.
But that's not an option. Borrowing is not an option.
Borrowing is actually an option because, particularly if it comes to funding the local costs like salaries, you have the traditional.
You mean with T-bills and
T-bills, debentures.
So what if nobody's buying it?
And there's why we have a problem. The problem we have in Barbados is that the banks are lending cheaper to you to buy cars and houses than they're lending to the government to fund.
yes.
The other problem is, at this stage, I believe, without knowing the underlying numbers, is that the Barbados government has reached what is called the counterparty limit at the banks in Barbados. So the banks are no longer permitted to lend the government any more money because they're right at the top of the limit. So that if that's the case, then you have a problem that is very, very serious. Because the banks statutorily cannot lend any more money to the government unless, and there's one thing you can do, the central bank will then have to go back and change the requirement from the current 8% to 10% or 12%, or God forbid to the 28% that it was during the 1970s.
Wow.
Right?
So we have a couple of issues. One is we have excess liquidity in the system.
Yeah.
In terms of savings.
Right. We have no investment vehicles.
And we have no investment vehicles.
We have no investment vehicles. Right? And the government, which was the preferential investment vehicle, is no longer the preferential investment vehicle. We have some structural problems in Barbados as far as debt is concerned. And the opportunity that was available, I think it was 2013, when the governor and the Minister of Finance went to do the roadshow to do debt restructure, and they talked about the fiscal, or that was 2001, when they talked about the fiscal cliff crisis in the US, which is why they can do these $500 million debt restructure. That should never have been put on hold. Regardless of what the roadblocks were, the opportunity to restructure the Barbados debt was 5 years ago and not today. So we were still BB rated. We still had liquidity. We had the flexibility and the room to term our debt out from 2021, 2022, 2027 into 2035 and 2040. That, I believe, is an absolutely missed opportunity.
So we're at a stage where you have excess liquidity. You have all the other challenges. So how do we?
If I was governor, I would increase the reserve ratio.
But
But
what if there was another method?
I would increase the reserve.
What if there was another method?
Yeah, there are other methods, but we should talk about that one first next week.
No, we'll start with it tonight.
No, but because the other one which I will object to, but because and I'm going to be a little bit more draconian than I might normally think it is. For me, I think either the banks have to take a little bit more risk. We have to bring the issue of the risk.
Many banks have said savings is an investment vehicle.
Yeah, almost 0%.
0.1.
That same bank.
Let me hold on.
Okay.
Let me finish the point. The banks have to take a little bit more risk. They have to step back on the risking because the risking, as being carried out right now in Barbados, has the ability. I know one industry where the banks are literally withdrawing in block banking facilities from them, which means it will destroy the whole industry.
Mm-hmm.
That cannot happen. What they've done, what they've been doing in the offshore sector, should not happen. Barbados is a sovereign country. Barbados has said our pillar of one of us is our financial sector. The same banks who are now de-risking accepted those risks, but I think the environment is actually riskier in Barbados compared to the technology now. That the ability to course that in the 1970s. We cannot allow us to put we cannot do that. And this goes back to the session. We need for a national bank or a national bank presence which has its own control. They're all
because what I was alluding to earlier, there was a concept that came to me last week via another party, and when I use the word another party, I mean another individual, but we got to be careful parties. Anyhow, so what if we had a mechanism whereby we can transfer liquidity in the system into stable, hard-earned FX currency? Okay. Investment vehicle. What the concept is to have a national investment fund.
Okay.
It's not a fund manager, and it's not something controlled by government. It is a mechanism whereby we can use. Right now, the interest there's no real investment for us. Why don't we invest in something in Barbados? It's not a concept that is new. It's not reinventing the wheel. Mm-hmm. What I do know is what I want is what we in Barbados do best, because we're going to be doing a little SWOT analysis on it. And the SWOT is strength, weakness, opportunity, and threats. What I want is the folks in Barbados to give us all the reasons why, all the weaknesses, and all the threats of a fund whereby we as Barbadians can invest into a fund. It can encompass the divestment, whatever you want to call it, divestment, privatization, encompass the vehicles into sort of like an equity swap by the government into the fund. Also have maybe through some sort of contributory scheme. It's a different beast than NIS, but it will work along the same lines as NIS. It can provide stabilization within the economy, taking excess savings, or when we need when we're going through it will kind of stabilize the ups and downs of the economy. It will work alongside, but not in contradiction of the governing with the central bank or even the Minister of Finance. Okay. A couple of things that I will just go through briefly. It's basically the goals of the fund would be to transform local capital into sustainable and stable future hard FX revenue stream, create a major new economic pillar in financial services, and provide a new source of finance at all levels. And it favors return over liquidity. This in contrast to the necessity of liquidity for the central bank FX reserve FX being foreign exchange reserve management. And it will provide a framework to transform local private investment sector to globally facing sector on which the government of Barbados sets the rules for public policy benefit, allocations, conversion rates, fees, repatriation rules, etc. It gives the public fund the ability to invest globally and primarily hold the assets denominated in hard currencies. As I said, it's a separate beast to the NIS. It's a basic diversification of the economy. It may need 10 to 15 years before there's material fiduciary benefits that start to accrue, and the National Investment Fund is worthy of the title of an economic pillar. It will take is a very long term. The challenge you'll have there is that governments are based on their performance over 5 years. This is a long term, so that's why I said the analogy to the NAS. Other than that, it's a different beast altogether, because the NAS has an extreme long term analysis, and this will work differently than that. We'd also use the foreign reserves to support through the holding of hard currencies, and will help restore rating and reduce borrowing costs. It also gives us the potential to buy back our distressed Barbados debt at 92 cents on the dollar, which it is right now. So basically, it's like if you had your mortgage and your mortgage is $100,000, you'll be able to buy it back at 92,000 tomorrow, assuming that we have the hard currency in play. One couple of the uses of the fund is, as I said, it's used to stabilize in the economic downturn, and it's used to counterbalance the recessionary effects. It could be considered a savings fund for future generations, boost returns versus local currency instruments. Pension reserves, investment reserves, soak up excess savings and liquidity. But right now you have funds that are doing nothing that could be used in more of an event, and it's more of an investment in Barbados. As I mentioned before, there could be a mechanism whereby the existing state-owned enterprises transfer to a fund in exchange for equity. It opens the path to partial divestment to raise cash, which the state retains either a golden share or a majority stake. You can be corporate bond issuance to raise cash, or it could be a combination of the two. Obviously, there's going to be challenges. This is only in concept stage. There's a couple of us that will be looking to pursue this, and as the time goes on, we will look to bring other people on board. It's to try to develop something that will carry us forward for the next 10 to 15 years, not any of the sell the cow today and can't buy the milk tomorrow scheme. It will require coordination with the central bank to avoid potentially redundant policy choices. There'll be a wider coordination with the Ministry of Finance for same reasons. However, the most significant point, it'll be clear, well-articulated mandate that leaves no room for suspicions of mismanagement, cronyism, or opaque goals in decision-making. We bring the Auditor General on board in this regard for good governance advice, e.g. monthly reporting, composition, etc. We must not leak the returns back into Barbados dollars above a mandated level. As always, the devil is in the details. We've had the GEMS, which, for lack of a better term, was a failure to some extent. You had the Barbados development bonds. And this scheme takes the political out of it. It is more, and it is utilizing. We have a lot of talent. We have a lot of reserves in Barbados that are underutilized, and we have the concept that government can't run anything. Well, maybe that may be true because of how a government is intended to work. But what is, as you said, with the Light and Power, when the government divested its asset, the Light and Power didn't just stop working overnight because they had capable people running. So in that same format, that's the sort of principle taken in here. Now it's a large task to take on. It's obviously in conceptual stage, and we will try to put it into a format that is more readily palatable for everyone. And the beauty about it is bipartisan because it's using one. The central theme is Barbados. The devil is in the detail, and this is where I open it up to to Barbados now is that tell us all the reasons why it will not work. That's what we want to hear. All the reasons why it will not work.
One of the questions from the section, if what proportion of the investment will be in local or foreign assets?
That is still in concept stage. You can't make a blunt statement of that. What you will find is that a concept fund like this will start probably 100% in local assets, and as they diversify the assets, you'll build it up over time. But you cannot make a decision on that when we're in the conceptual stage.
Yeah, it's very, it's like not.
It's literally a hot potato that dropped on Tuesday.
Yeah.
Right?
So we're still digesting a lot of it,
Yeah.
and but we will endeavor to work on it. But there'll be the idea is it gives us, all of us, a vehicle in which the underlying fund is Barbados, and it takes rather than putting it into the bank and just leaving it there to collect cobwebs, it gives us the ability to manage Barbados in terms of looking for companies, looking for global investment, and ideally looking for companies that earn in foreign exchange. It gives you support for the currency, and it gives you stabilization. You can also, because you're now taking that lending out of the overseas market, you can actually increase your credit rating because you're in a more stable economy by using a vehicle of a methodology that's sitting there doing nothing right now.
Okay.
Currently we have the challenge that's been created over the life of Barbados. The life of Barbados for 50 years. During the lifetime of Barbados, we've had significant restrictions on the use of foreign exchange in Barbados. For example, today, if you want to make an overseas investment, you are a professional, you have the judgment, you have the education to do it, you are still subject to a review by the Central Bank of Barbados. While you may believe the type of returns and the risks are acceptable to you, the Central Bank can overrule you.
Russell is asking the question, how is this concept different to what is currently done by local fund managers?
Because the fund is going to be somewhere in between. Because we're going to have more of the we're looking more on the investment fund managing side, but we also still have a back door into understanding that the underlying company, Barbados, there's policies that have to work together. So as vague as that is,
a fund manager today has set targets and restrictions in terms of what they can do based on that specific client base they're managing the funds for. Whereas in this program, the fund manager or fund managers can take a global view as to where we need to position Barbados at a particular time in terms of what is our percentage of reserves that we want to hold in US dollars based on where the Barbados government or Barbados country is sitting in terms of its own reserves. It would form actually like, we want to have a better word, a hedge. It will provide a natural hedge against the challenges within the Barbados economy as far as exchange is concerned. But again, you're not going to get there year one, you're not even going to get there year 5.
10 to 15
years. It's 10 to 15 years. But because we have not had a environment where Barbadians have been able to freely invest overseas in hard currency, one of the challenges in terms of managing our reserves, all of the reserves of Barbados are either in the commercial bank, acceptable reserves are in the commercial banking system, or in the central bank. And that's where we have a big exposure.
Well, I think we are reaching our time. If there's anyone that has any questions, I'm hoping that this generates a lot of questions. We're looking for all the reasons why this will not work, because we want to stress test this. We want to make sure that I feel strongly about it. As I said, it's only initial concept stages. There's not that we could talk about it a little bit more, but we would have to break it down in segments, because it's only just it's just a watered down version that we gave tonight. Don't just discard it. Let us discuss it. We're here for options. Our whole concept is, how are we moving Barbados forward? Let us take ideas, let's move with them, and let's try to put them in place. So from me, that's what I'll be working with in terms of moving forward. We have other segments coming up on other sectors that can move Barbados forward, and that's what we want to try and do here with this group.
Yeah, it's very important to look in terms of Barbados, in terms of what investment opportunities there are. How do we stabilize Barbados by creating a climate of investing and investments? For too long, we have ignored the financial sector as an avenue for the ordinary Barbadian. For most of my life, I'm a little younger than these two here. The vehicles for investing have always been housing, insurance policies, and bank savings. And to a large extent, the world left us behind around 1990, and we still have not caught up. So we have to look at creating investment vehicles for people to work with, and more importantly, we have to create investment vehicles where the majority return goes to
FX.
Goes to the individual investor rather than goes to the sponsoring organization like a bank or a mutual fund. Because I think if you look at those returns over the years, the fees have ate up your investment returns.
Okay. Well, on that note, we will wrap up for the night. My hope is that we come up with ideas that can practically be put into place. And at this point, we know that our options are limited, and we're trying to see how we can come together to see how we can form some kind of solutions. So I hope that everyone had an informative session, and you don't necessarily have to come up with the ideas and the comments now, but you can send them in at any point in time. You can discuss them with your peers, and we see how we can use this vehicle or any other vehicle to move forward. So you can send in your suggestions, and we can have it as a discussion topic for next week if that is the case, and we see something that a majority of persons think can actually work. So I hope you guys have a great Thursday. Thank you for tuning in as usual, and we look forward to seeing you again next week. Bye.